This is your LMAX Exchange Technical Update for Thursday, November 16, 2017. Eurodollar. So the market has broken out above that consolidation as we talked about in the previous day, trading up back above 1690, but we had also said that the market would need to establish above 1880, the right shoulder, to start to put the pressure back on the top side for the market to think about a resumption of the uptrend in 2017. And unless we can break and close above 1880, we're more in a neutral state while above 1690, that level we broke out from, than anything else. And so there is still risk that the market puts in a lower top here and continues lower. We'll have to see how things play out. Medium to longer term, the trend does favor the top side, but short term, while the market holds below that right shoulder at 1880, there is still the possibility that should not be ruled out for another downside extension and continuation of declines. Right now, the key levels to watch come in by that previous resistance now turned support at 1690, and then 1880, of course, on the top side. Sterling dollar. The market continues to be confined to a consolidation. Here it's about breaking above 33.40, the range high, or back below 30.25 for clearer directional insight. However, as we continue to note, if we do break below 30.25, setbacks are expected to be limited with the market in an uptrend, a clear uptrend in 2017. Setbacks should be limited to the 127.75 area ahead of an eventual break higher. If we break up immediately through 33.40, then that puts the focus on a retest of the 36.60 2017 high, and then for a push towards 140 further up. Dollar yen. So dollar yen has been showing signs of rolling over the past several sessions. The market had recently traded up to a range high that has defined this market, the top of the range here in the 114 area, taking out 112.95 on Wednesday, but of course the market will need to break below 111.65 to really encourage that range resumption and the bearish prospect. Euro Swiss. So Euro Swiss continues to focus higher. The market recently put in a 2017 high above 117. The market now is thinking about that next big push towards that critical psychological barrier that had been supporting the market up until January of 2015 at 120. Look for setbacks to be very well supported, and only a break back below 112 would compromise this outlook. Aussie dollar. So Aussie has continued with its run of declines. The market is looking at a test of a key measured move extension in the 75 area. Any rally should be well capped with only a break back above the 79 handle to ultimately compromise this bearish structure for Aussie dollar. Dollar CAD. So dollar CAD is in the process of recovering after putting in a plus 2-year low down around 120, just shy of 120 at 120.60 back in September. The market is now looking to continue higher, and we believe that there's room for this correction and this recovery to extend up towards the next key barrier at 130 further up. Only back below 124 would compromise this outlook. Kiwi dollar. The New Zealand dollar has been in decline over the past several weeks, over the past few months since topping out in 2017. This key support now is at 68.18, that low from May, which was actually matched back in October, the exact same low at 68.18. But the market does remain pressured to the downside, and we'll need to see a break back above recent highs at 69.80 at a minimum to take the immediate pressure off the downside. But overall, a break above 72 would be required to force a shift in the structure. Until then, look for lower tops for a downside extension below 68.18 and towards the 65 area further down. SPX 500. Well, there's been clear evidence of the S&P 500 showing signs of a correction, but we continue to say that the market would need to establish really a close below 2,500 to make a meaningful dent. There is that key support at 25.44 if close below, and then staying below there on Thursday would do a good job of encouraging this corrective outlook. Until then, there is risk that the market continues to be bought up into dips for fresh record highs beyond 2,600. Gold. Gold continues to show signs of being very well supported into dips. The market has been putting in a series of higher highs, most recently a 2017 high up at 1357 about, and so look for the market to be supported around 1250, 1260 area in favor of that next major upside extension towards and through the 2016 peak at 1375 further up.